This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, October 15th, 2015. So definitely some pickup in volatility in the euro over the past couple of sessions, with the market trading higher and taking out some key resistance going back to May at 1467. The market has been very well capped on rallies into the 11400s over the past several months, as you can see here from this internal resistance going back to May and then again in June and September, always rallying and then stalling out up towards and into the 11400s. So this latest break above 1467 is significant, and it will be interesting to see if the market can establish a close above 1467 on Thursday. If we do see a close above 11467, this could open the door for a more significant upside over the coming sessions back towards that key high that we saw at 117.15 back in August. That 117.15 high was perceived to be a potential medium-term lower top ahead of a resumption of the longer-term downtrend, and if we do see a break up towards 117.15, it could really start to compromise the structural outlook for euro dollar. Sterling dollar. So cable has mounted an impressive recovery rally in Wednesday trade, with the market negating that bearish performance that we saw on Tuesday and sharply reversing higher. The focus now is potentially on additional upside into the 155.50 area, which represents a 78.6 fib retracement off of a recent high-low move from that 156.59 high that we saw going back to September, and the recent low that we saw in September at down around the 151 area. So that's the September high-low move. The 78.6 fib retracement off that move comes in around 155.50. But ultimately, the market is still trading with a downward bias given the lower tops that we've seen off the 2015 peak. And while we hold below 156.59, that high from September, the market is favored to put in a lower top and eventually head lower. Dollar yen. So dollar yen seeing some movement in Wednesday trade, with the market breaking down quite sharply and taking out some key support in the 119 area. At this point, 118.60 comes in as key medium-term support, below which will open an acceleration back towards that August low at 116.12. At this point, a medium-term lower top is now sought out in the 121.74 area, and ultimately only a break back above would force a shift back to the top side. Euro Swiss. So not much going on in Euro Swiss. This market's taken a back seat as it consolidates over the past several weeks, although the recovery outlook here is intact, with the market favored to break above 110.50 and towards 112 further up. At this point, only back below 107.14 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie has put in an impressive recovery rally off those recent multi-year lows, and the market is showing signs of a potential reversal back to the downside, though the recovery since Wednesday does compromise this outlook a bit. On a medium-term basis, only back above 74.40 would potentially delay the more meaningful bearish outlook, while inability to do so will suggest that the market is going to roll over back down towards that recent multi-year low, just over 69. Dollar CAD. So dollar CAD continues to extend declines after recently putting in a fresh 11-year high at 134.57. At this point, though, the market is coming into some key support in the 129 area, and really only a close below 128.67 would give reason for concern and delay the more intensified bullish outlook. Kiwi dollar. So Kiwi has put in an impressive surge over the past several days from those multi-year lows, with the market extending gains now above 68 and potentially now focused on a retest or a test of the 50% fib retracement off that critical move that we saw, that high going back to April of 2015 down to the recent low that we saw in August. So there is the possibility for these gains to extend towards the 69.45, 69.50 area, at which point the downtrend is still firmly intact and a lower top would be sought out. SPX 500. So the S&P 500 has continued to hold on to gains, well supported on dips after the recent recovery out from those 1800 area lows. But a lower top is sought out around the 2020 area following that breakdown that we saw back in August, which suggests a structural shift to the downside. At this point, only back above 2050 would really compromise the newly adopted bearish outlook, and the market is eventually seen lower, back down towards a retest and break below those August lows at 1833. Gold. So gold has put in an impressive surge in Wednesday trade, with the market taking out critical resistance at 1170 to confirm a medium-term lower top at 1100 and solidify the major recovery prospects for this market. At this point, the break above 1170 exposes next medium-term resistance at 1233 further up, while ultimately any setback should now be very well supported ahead of 1130. Only back below 1100 would really force a shift in the outlook and put the focus back on the downside.